Hey traders, and welcome back to another edition of the Forex Market Preview. I'm your host here this weekend, Charles Miles, coming to you as a professional Forex trader and trading coach here at Trade Empowered. Guys, if you're new, welcome to the channel here on YouTube. Please hit that subscribe button so you don't miss this video or any of the other videos that we upload regularly here to the channel. We got a lot of great free content coming to you, and you'll get notified every time we post something if you're subscribed. So make sure you do that. Also, guys, if you are one of the near 30,000 who get this in email notice every weekend that we do it, thank you guys. And if you're not, you're missing out. And not only just to get this notice that, hey, we posted the Forex Market Preview, but there's also lots of great free trainings that come out only to our email list sometimes that don't go out publicly. Special product releases or discounts or promotions or new products that we might release. You might get first look at it by being on the email list as opposed to not. So make sure you head on over to tradeempowered.com/learn. That's our Learn to Trade page /learn. And you guys will have the opportunity to sign up there and get on our email list if you want to do that. All right. So guys, let's go ahead, and I want to get right into a training session here. I'm going to give you the exact rules that we use for our Gartley pattern. Now, we have a couple variations of this over the few years that we've been doing this for a while now, and this rule set comes from the creation of Constellation. Constellation is our advanced pattern software indicator that shows you advanced pattern formations in real time and displays them on the chart, so you can see exactly where the decompletion point is and without having to do any of the analysis. We have it from NinjaTrader and MetaTrader, but this rule set comes from the development of that. We had an opportunity to test a lot of different rule sets in terms of what Fibonacci ratios to use, and this pattern was actually varied. While we had a profitable rule set before, there was one tiny change that we made through that process in terms of creating the Gartley pattern. Doesn't mean that you have to change what you're doing if you're already doing it another way. If it's profitable, if it's not broke, don't fix it. Point is, this is the rule set that we developed exactly from the creation of Constellation for the Gartley pattern. Now, guys, many of you know what the Gartley pattern is. It's H.M. Gartley. Now, there's lots of variations of his pattern that he identified on the page of his book, 222. That's the page where you find it. And he just recognized this price pattern and put it in his book. And there's lots of, like I said, different rule sets and variations. This is the rule set that we use, and we have developed here one of them. So what you'll find out on the internet is many of them are confusing in terms of you try to Google search, Fibonacci ratios for a pattern. I've done this myself way back before I found Trade Empowered. I was like, well, that doesn't really make any sense. It was all very confusing, and it was like, well, what's the rules? What's this rule? What's the next rule? What's the final rule? Where's the completion? That's what I want to know. Give it to me straight, right? So that's what we're going to do here, guys. So the first thing we need for every advanced pattern formation that we trade here is an impulse leg. You need that. Got to have it. Okay, that's the first thing. Call that the impulse leg. Now, impulse legs can be seen all over the market. Okay. Basically just means a move of price that's very obvious. You can see it's clearly in a downtrend or an uptrend, right? You can see the market is clearly moving in a direction. In this case, guys, I want to show you a short Gartley pattern first, okay? I'm going to show you a short one. So whichever direction the impulse leg goes, in this case from high to low, that will be the direction of your trade, okay? So this is a high to low impulse leg, which means the completion will be a short trade. So we get the impulse leg, and we label this our starting point X, right? Many of you are familiar with this. And then our kind of termination point of this move, A. Now, we don't know exactly where it's going to be, but once it does happen, now this is where the rule set comes in. If I see an impulse leg, which is all training your eye, okay? There's some structure qualifications we can give to it to help you see them, but you have to train your eye with this. The more time you spend on the charts, the more easier it's going to be for you to see impulse legs. You'll see the move, it'll happen, and then you'll wait for a retracement. So in this case, we need a retracement of X to A to B up to the 618, but cannot touch the 78.6. Now, there's no candle closes in this pattern. There's no candle closing, none of that, so don't ask. That's not how we trade it here. Price touches is what we're looking at here with this pattern in this rule set, okay? Go ahead and put my Fibonacci retracement from X to A in there. Boom, we come right in on the 618. Look at that. all by eye. This is what happens, guys. If you want to get good at pattern trading, spend time in the charts. Okay, you can just draw these things out and you don't even have the Fibonacci. That's how they'll just pop out on the chart to you. You'll just see them, right? Boom, there it is. And until you train yourself and spend time, that's not going to happen. So get in the gym. The charts are your gym. So if the X to A retracement of price touches the 618 as a minimum, but does not touch the 786, we have a potential Gartley pattern. So I'll drop it in right there. If it touches the 78.6, no go. That is a different pattern altogether, which we can talk about that in a second about where you can learn these patterns, but that's an entirely different pattern according to our rule set. So we have an impulse leg, X to A. If the X to A retracement touches the 618 as a minimum but does not touch the 786, we have a potential Gartley pattern. Condition 1 is met. Let's go ahead and label it. This is going to be point B. Okay. So what's our rule set? Condition 1. Find impulse leg. Yes. Gotta have that. Okay. Find impulse leg. Condition 2. If X to A retracement touches 61.8 but does not touch 78.6, we have condition 2. Again, touches. Price must touch. I don't care how it touches it, whether the candle closes on it or it's just the wick. Don't care. Candle close is not important for this pattern the way that we do it. So if the X to A retracement touches the 618 but does not touch the 78.6 retracement of the Fibonacci retracement tool, condition 2 is met. We're good to go. So what's condition 3? Well, price must then retrace off from the B point. So the A to B retracement is what this will be. Must touch the 618 but cannot touch the 886. Okay, so let's go ahead and draw our Fibonacci. What I'm going to do, guys, is clean this up here. I'm going to get rid of the retracement numbers that we don't need. Whoops. Okay. Just leave those on so we have our qualifying B point. Let's draw now the A to B retracement from A, low to high, B. There it is. We come right into the 618 based on how I drew it. That's what we're looking for. And we cannot touch the 88.6. Okay. We must touch the 618, cannot touch the 88.6. Okay? So right here we have our C point. Boom, there it is. So let's put our condition 3. Condition 3. If, you notice how I write these, guys? If, if then, right? If this, then if this, then if that. You need to write your trading plan like this in your rule set for how you trade. If it's not conditional, it's subjective. And we don't want that. We want objective rules. Okay? Clear as can be. Basically, you could hand me your trade plan, and if I know enough about trading, I may need to ask some questions about your strategy, but the rule set is clear. I'll know exactly what it is you're doing. If I can't look at it and know what it is you're doing, that's probably a problem, because that means you don't know what you're doing. Okay? So if the A to B retracement touches the 61.8 but does not touch the 88.6, condition 3 is met. Okay, we're getting very close to a Gartley pattern here, guys. We're getting close. We'll go ahead and move these over a bit so we get some room next to our pattern. Okay, so what's the final point? Where's the completion zone? Now, I said zone, however, we don't use zones here at Trade Empowered. Doesn't mean you cannot. I know many people that do it. There's nothing wrong with doing it. There's lots of different ways to trade, guys. Point is, we want to be as clear as possible with the rule set when we're teaching traders, because the problem is, many of you guys, the waters are muddy. It's like looking into a dirty pond. Right? There's dirt and dust and all kinds of stuff floating around. You cannot see the bottom. That's how your trading is. Okay, you're confused. There's too much cloudiness going on. You don't really know what's going on. What are the rules? Where's the completion? How do I find the trade? How do I enter the trade? And that's important. So we don't use zones. Doesn't mean you can't, but we don't. Okay, we make it as clear as possible with a profitable rule set. So what's the final rule set, Charles? Well, the final rule set is to use a Fibonacci extension of A to B, a projection from low to high of B, A to B, and back down in. Just going to move this over a bit so we're out of the way of our rule set. Right there, okay? The 127.2 extension is where we're looking for this to complete, okay? Let's make it big so you guys can see it. Boom, right there. So price must then come up out of the C point. Again, we cannot touch the 886, must touch the 618. Then we have to come up. Now, this condition here of the 127.2 extension is that it must be past the B point. It cannot be below it or at it, to the pip, okay? Even to the pip or the tick or whatever market you happen to be trading. In this case, Forex, I'm saying pip. The 127.2 extension must be past B. Even if it's past it by 1 pip, valid, okay? You must be that explicit with your rules. So the 127 extension is where we're looking for the D completion point, and it must be past the B point when you project it, okay? Even if it's 1 pip past B, that's fine. Still valid, okay? So that's it. Let's go ahead and label our D point right there. There it is. Boom. So there is our Gartley pattern. And again, what we're looking for is the completion up here and the market to do this and go short. So we'll talk about the targets and how you do that here in a second on an actual example. But let's go ahead and put in our final condition, right? Condition 4, if the A to B extension of 127.2 is greater than point B, then that is our completion at D. Okay, that's it. That's our final condition. Let's go ahead and move this over, and then we'll go ahead and move this over. Can't quite see it, guys. Let me go ahead and shorten this up a bit so you guys can see the whole rule set. Let's try that. There we go. Condition 4. Let's go ahead and put it right there. Okay. 1, 2, 3, and 4. All right. So that's it. That is the Gartley pattern. So, condition 1, find the impulse leg, X to A. Boom. If the X to A retracement touches the 618 but does not touch the 786, condition 2 is met. We still have a valid Gartley pattern. Condition 3, if the AB retracement touches the 618 but does not touch the 88.6, condition 3 is met. Final condition 4, if the A to B extension of the 127.2 is greater than point B, then that is our D completion. And if the impulse leg is high to low, the trade will be a short. Okay, in this case, we were looking to sell at 1.5029s. Stops will go above X, and then targets will be at a Fibonacci retracement of A to D. So we'll get into the target placement and stop placement on a real example here in a second, but that's the rule set, okay? So you have the rule set, you know what to do, you know how to trade this Gartley pattern, okay? So let's go ahead and look at a real example. I'm just gonna pop down my chart here. I'm gonna give you guys a second. I'm gonna see if you can see the pattern, okay? Just give you a couple seconds. All right, do you guys see it? Now this is a short pattern. That's why I went over a short on purpose, because that's what we're looking at here. Now, if you want to do a long pattern, just reverse all the rules. Okay, you have the rules. Go back and watch this video again. Go back to the rule set, rewind it, and then watch those, and then just do them in reverse order. Okay. But here we have. You guys see the impulse leg? There it is. Right? Obvious move. Yes. Without question, everyone can see this is an impulse movement to the downside. Let's go ahead and draw on our Fibonacci retracement tool from X to A. There it is. Let's go ahead and label the points, guys, so you're on track with where everything goes. X, these capital letters, X, A. Okay. What do we say about that? Right? Well, put this out here. All right, so we have the A point, right there. We have to have the retracement come off of A. And what we probably want to do here, guys, is drag this down a bit to the prior point right there. A is actually going to be over here. Okay, you guys see that? That is a lower point than over there before we get the retracement we're looking for. Okay, there it is. There's the impulse move. Lowest point. Now, 618, boom, there it is. You see it? Price came right into the 618. Mark that up here. This is our B point. Yes. X to A to B. Touch the 618, but does not touch the 78.6. No problem. Clearly avoid that condition. We're on a Gartley pattern alert now. That is condition 2. We've already had condition 1, which was find the impulse leg. Condition 2, 618, not touch the 786. Condition 3, the A to B retracement. Yes, must be at least the 618, but cannot touch the 88.6. We come down off of B, right there at 44.74 as we hit the 618. We do not touch the 88.6. Condition 3 is met, and we have our C point. Guys tracking? Okay, everybody with me? Finally, what's the last condition? Well, we need a Fibonacci extension of A to B. From A, low to high, point B, and back down in. Slide that over. Get it perfect, right on the 44.28. It's perfect. And there's our 127 completion. You guys see that? The extension right there. Get rid of the other one so you guys can see it. Fatten it up a bit. There it is, 127 at 45.81s. You see we've already filled this pattern. If you were trading this, you'd already be in the position. But I just want to show you guys a real example. So that's condition 4. If the extension of A to B is greater than B for the 127.2 extension, that is my decompletion, in this case, sell zone. Or sell price, as it were. As I said, we don't use zones here. No subjectivity. All right. So let's go ahead and draw this out. What I want to do is get your stop placement, some options for that. What we found, guys, is on the 16-minute chart, a 10 pip stop to be very common, anywhere from 10 to 20 pips, somewhere in there. Okay, so that's an option you can use. 10 pips above X, that's the one we'll go with here. 46.12s, 10 pips above there would be 46.22s. So the stops are going to be right there. Go ahead and color this line red, or something reddish, brownish color. There we go. So stops are up there. What about targets, Charles? Glad you asked. Targets will be the retracement of A to the decompletion. Okay. Now in this case, I'm going to start it off here at 127. Guys, let me go ahead and get rid of these other retracements and extensions and messiness so you guys can see just what we need to see right now. I'm going to go ahead and get rid of the retracements I don't need to see. All I need is the 38.2 and the 61.8. Now we already had our decompletion at 45.81s. Okay. Now what happens here, let me go ahead and, I deleted that, guys, sorry. Go ahead and put that back on. A to B, back down in. There it is. Okay, let me move it over so you guys can see it a little further. There we go. Okay, so there's our 127 right there. Now, what we need to have happen here in terms of the targets is we don't know exactly if price will reverse right at the 127. That's the prediction, so we want to get filled there, okay? But we don't know if it's going to fill right immediately and then reverse over. But you start off with, hey, well, if I'm worried about risk reward from my stops to my targets, if that's important to you, which it certainly should be in most cases, this would be your risk, okay, down to the 127. And if we reversed on a dime, right here at the 127, would I make my reward per my risk? Well, the answer is yes, right? That's the same measurement, but the 38.2, which is your first target, is way beyond that risk level. Okay, so in the case of risk reward here, if price reversed right at the 127.2 and you got filled, that would be your initial target and per risk that you'd be looking at in terms of risk reward. So in this case, what happens? Well, price pushes past the 127.2. What happens, Charles? Do we leave the Fibonacci right there and use our original targets? The answer is no, you do not. This is how we do it. We move the retracement up as far as it needs to go, all the way up until you get hit with your stop. If it goes like this and you don't get stopped out, that's what you do. Okay? Now you notice that reduces your target, but your initial setup, guys, even with structure trades, trades go against you, right? At some point, they go against you, and then maybe they reverse around, and then you hit your target anyway, even with price action trades. So this really isn't any different. We just happen to be moving the target. It's a similar principle. We just are using dynamic targets because the trade will go against you, but in terms of profitability, we found this to be the best, okay? Rather than using a static target and then never moving it. So this is a very unique way that we trade patterns here, okay? So retracement is from A to D, or the highest point at D. If price pushes past the original 127 completion, you move your Fibonacci, okay? So in the case of this pattern, if you were in the pattern right now, you'd be looking at your risk from entries to there, right? And now, let's go ahead and copy that arrow. We're looking at entries to our targets, still greater than our 1-to-1. Obviously, we're already in the trade, not much we can do about it. What you'll be looking at here then is targets down at the, so you were entered here, say 45, 78s. We like to front run our orders, guys, to make sure you get filled per the spread and things like that. Right there, 45, say 31, 32s. And if we front run our targets too, guys, we want to make sure we get filled. So you notice there's a few, you sacrifice a few pips, guys, to get your targets and your entries, okay? There's no reason quabbling over, it's 3 pips. No. Doesn't matter. In the long scheme of things, if you test your plan, you'll see over time you make money, you're not going to care about that anymore. What you're going to care about is getting in trades, all right, getting entered, and getting filled on your targets. That's what you're going to care about the most, because you want to get your profit and you want to be able to be in the trade. Otherwise, you can't get any profit at all. 44.94s for target 2. Hey, right down at the 618 retracement. All right, guys, so that's target 1. Here's your stop. Here's target 1. Here's target 2. Okay. All right, so there it is. Let me go ahead and make it all pretty for you. Just go ahead and told you guys about Constellation. I'll go ahead and fire it up here. Constellation Gartley. True. Boom. There it is, guys. Automatically fills in the triangles for me and already knows exactly where the calculations are going to be. It's a great thing about Constellation, guys. I've shown it before. I know we have a lot of new people joining the channel regularly, so I want to make sure you guys know about it. It's a great tool. It can save you a lot of time, but that is the Gartley pattern. Go ahead and label this guy. Gartley short. There it is. Potential Gartley short pattern here, guys. It already completed. If risk reward still works, maybe you can figure it out. Doesn't look like it would be, though. Wouldn't want to get in this trade. The moves kind of already happened without you. Now, if price comes back up into the decompletion area and you have an opportunity to get involved again, there's nothing wrong with that. You want to follow your own rules, but we would not see anything wrong with doing something like that. Target 1 hasn't been hit. You're really just getting a second chance, and it'll probably be something like a double top in here if it were to happen. So if price comes back up into this area at 45.81s, you could certainly look to get short again. Again, trade your plan. That's something that I would look at doing if it was me. Stops will go up here, 10 pips past X at about 46.22s. Targets, as long as we don't press past the previous high at 45.92s, still looking at the 3-2 here at 45.32, and then target 2 at 44.94s. So that's what I got for you guys this weekend. I wanted to show you that great and excellent pattern. Profitability wise, we're looking at anywhere from 55 to 65% to first target win ratio and profitability. It all depends what pair you traded on, what time frame you traded on. Obviously, who's the trader, right? The impulse leg is discretionary. You must find them. That is a critical part of your win percentage. You can't find the trades, and that's going to hurt your potential win percentage too, right? You have to be able to find them. So lots of factors that go into that. That's the reason for the wide range of 55 to 65%, somewhere in there, depending on all those things. All right, guys, what I want you to do, this is your homework assignment. Okay, you're going to get homework here today. Go out into the charts and find this pattern. Don't trade it necessarily. You trade your own plan. If this is not in your plan and you don't know anything about this pattern, or you don't even know what the expectation is in terms of profitability, you've never tested it, you shouldn't trade it. You shouldn't trade anything that you've never done that for, ever. Okay, you want to make sure you test it and practice it and know it. But the point is, get in your charts, do your homework, put your time in, write down this rule set, and go practice. All right, guys, I hope you guys have a great week here of trading. We're moving into the fall here, coming out of summer. Hopefully, as we start getting into September, we'll see the markets kind of pick up and take a more rational format in terms of how they move and what's going on as more institutional traders start to take positions and establish their place in the market, having come back over the summer. Those of you that have been in the syndicate with us, though, know that over the last few weeks to a month, we've done really well here in the summer. So pretty good summer trading for us this year. I fully expect that to change as we can't go up forever. We'll have to take our losses at some point, or at least have a slowdown. So hopefully things, though, will pick up as the fall begins. All right, guys, have a great week. As always, be great, be professional traders, and I'll see you next time.